All right. Today's Monday, the 21st of July. This is a recap for the stock market activities today. And first, I got a good one for you tonight. I think we've learned a few things over the weekend, such as how to have an affair for dummies. And rule number one, you don't want to take your mistress to a concert or a sporting event. See, this guy's an amateur. He doesn't have a lot of experience. That's why he took his hoe to the concert, and the rest is history now. Got to lose half of his net worth, not to mention lost his job. So gentlemen, word to the wise, don't take your hoe to a concert or sporting event. You got certain activities for your hoe, and other activities are preserved for the wife. Among them, concerts and sporting events. You got to learn from the Italians. Saturdays for the wives, Fridays for the hoes.
Saturday night was for wives, but Friday night at the Copa was always for the girlfriends.
Although the amateur mistake here is taking your wife and your mistress to the same restaurant. Big mistake. That's how he got caught in the movie. You'd have restaurants that you frequent with your wife, other restaurants reserved for the hoes. Can't mix the two, especially if your wife is paying the waiters. And for the love of God, gentlemen, you don't leave your wife for your hoe. Big mistake. You gotta go back. We're not animali here. Anyways, we have more important things to talk about than this garbage, so let's dive right into it, folks. There's a lot of talk about, the Fed needs to cut rates, and Jerome Powell is playing politics, and yada, yada, yada. At the same time, you have a meme stock mania. You got to understand that if you want to ask the Fed to cut rates, what is the emergency? And is having a meme stock mania a sign that the Fed should reduce rates, or a sign that the Fed should actually hike rates because the policy is not restrictive enough? Ladies and gentlemen, we have witnessed today the largest gamma squeeze in the history of the stock market. Gamma squeeze means done via the options market. And it happened in this ticker right here, Open Door. It's a garbage company that doesn't produce any profits, but it's heavily shorted, and somebody spotted the opportunity that if we pile in, and he touted using social media, you can initiate a giant squeeze. And in this case, you got a short squeeze and you got a gamma squeeze. As the shorts begin to cover, out of the money call options that are being bought become a reality for the market makers. All of a sudden, the market maker has to buy the underlying equity. So you have two forces now buying the shorts and the market maker, and you see a big pop, as we've seen recently with Open Door. It's noteworthy, though, to zoom out a little bit in this chart and see where it's trading since the peak. Meaning this is another pump and dump scheme, and unfortunately we have a lot of Johnny-come-latelys, donkeys who are going to get trapped and lose a lot of money. So I'm going to give you some signs here on how to spot these kind of phenomenons, the gamma squeezes, and how to spot the end of a gamma squeeze so you don't get trapped. You're not the Johnny-come-lately to these kind of games. How to spot them. Number one, you're going to see some online chatter, and this is done by design. They're going to go in Twitter, they're going to go in Reddit, and begin to spit out the ticker and the trades, and what out of the money call options you should buy. That's sign number one. Then you're going to look at number two, huge changes in out of the money call open interest. This is really important. Open interest means if somebody buys call or put options and hold them overnight, it becomes open interest. So you have to use a screener and look for massive changes in the percentage of open interest. I'll give you an example here. This is the ticker AAOI, whatever the hell that is. Today we see massive increase in open interest in the calls, specifically the 30.5 calls. You see the OI change up 18,000 contracts. This is not a widely traded ticker in the options market. So when you see somebody overnight meaning, of course, the session before. You can't really trade options overnight. But what we're saying is in the previous session, somebody buys the call options, holds them, they're not trading them intraday. That becomes open interest. So somebody on Friday bought over 18,000 contracts of the 30.5 call options in the ticker. Really weird. And then you look at the puts, and they also bought similar quantities of the 24.5 puts. In other words, this is an insider. They know there is a piece of news coming, and the stock is going to react in an impulsive way. There's a big move coming. They're just not sure if it's going to be up or down. So in this case, they're doing a strangle. They're buying the put and the call with about 10% move up or down. And they're getting ahead of the game. And maybe at some point, if the move is to the upside, you begin to see more piling in of out of the money call options, and it becomes a gamma squeeze. But in Open Door, if you go back a few sessions ago, we began to see some really weird and huge changes in out of the money call open interest. They were already buying ahead of time as they begin to spit out the ticker and the idea on social media. Number 3, you see unusual increases in volume as the stock begins to move up. So if you look at the volume for Open Door, month of July, we begin to see that volume increasing as we see the stock heading higher. This acts as an evidence that somebody's buying the stock in a heavy way. And either it's going to be the shorts or the market maker doing a gamma squeeze as they see a lot of out-of-the-money calls being bought and they want to hedge against those by buying the underlying equity. It could be both. It could be short covering and the market maker buying, aka gamma squeeze and a short squeeze. Now, how do they end? We see the volume of puts increasing against the calls. And what you're looking at right here, we've seen a little bit of a reversal in Open Door as we headed to the end of the session. Why did that happen? What you're looking at right now is the weekly options expirations for Open Door. The calls on the left, the puts on the right. You want to look at the volume because the volume is what's traded today. And you can see that the mistake that the call options buyers did today is they piled in one contract. That is the 4.5. It has over 330,000 contracts traded today, which is huge. That's bigger than NVIDIA. That's how insane this phenomenon is. But the mistake is they piled in this one contract. On the other hand, look at the calls at the strikes of 2 and 2.5. We see high volume, but you look at that bar in blue. It is moving to the right, not to the left, meaning a lot of these holders of these calls that are in the money right now decided to book their profits and exit these trades, giving the signal to the market maker that it's okay to sell. Hey, market maker, you can book your profits right now along with us because we're abandoning these in-the-money calls at the 2 and 2.5. In other words, they left the 4.5 call options buyers today caught with their pants down. And what did they do, by the way, those 2 and 2.5 call options holders? They exited and they switched. If you look at the puts here, we see high volume spread out between 2, 2.5, and 3. These are the puts. They spread it out in 3 different contracts. They booked their profits from the calls, rotated to the puts, and gave the market maker the signal that it's okay to flush it down. Now, it doesn't mean the end of the phenomenon yet, doesn't mean the end of the squeeze yet, but they played a lot of donkeys really nasty today. They probably went on in social media saying, hey, we're going to buy the 4.5 calls. In the meantime, they were actually booking their profits from the in-the-money calls that they got, and they switched to the puts. We go back to the board, you see a technical reversal, which, is this a technical reversal? It's not really erasing the previous day worth of gains. It's just erasing the majority of the gains from today's session. So it is an intraday reversal. It's not a daily reversal yet. It's a warning sign. It's not a conclusive evidence that the gamma squeeze is over. Number 3, you see OI percentage change in the puts exceeding the calls. So this is what we're going to watch in tomorrow's session. If we see the OI change bigger in the puts than the calls, we're probably at the end, if not really close to it. Number 4, you see the volume peaking in the underlying equity. So we go back to the volume in Open Door. Look at this. Almost 2 billion shares traded today. We've never seen anything like this before. We've seen a lot of gamma squeezes before, a lot of short squeezes before. Nothing to this magnitude. And that's a demonstration of the sheep mentality and the power of social media. Now, is this volume climactic enough? It sure looks like it. It looks like a peak. But we're not going to know until we get tomorrow's session. If the volume in tomorrow's session is lower, we probably got the top, and the gamma squeeze phenomenon is now over. Now, in today's morning brief to my members, I did spot some unusual activities in certain tickers. I'm not making a call here that these names are going to explode next, but if you want to roll the dice, we're seeing similar phenomenons building up in these kind of tickers. One of them is GRAB Grab Holdings. The weekly chart shows maybe an inverse in a shoulder pattern. We see unusual changes in the OI, the open interest for out-of-the-money calls, or maybe they're building up for a move here in the ticker grab. Another one is AUR, Aurora Innovation. Doesn't look like a good chart to me in the weekly, to be honest with you, but maybe it is breaking out off a falling wedge pattern. I see a lot of unusual activities buying out-of-the-money calls, changes in open interest, unusual, so it could be. Here's another one for you, UPXI. Not my favorite, to be honest with you, because it already went from $2 to about $8. It filled the gap, and now maybe showing a reversal candle, so maybe the gamma squeeze here is over and they're about to switch to the puts and bring it down again. Here's another one, RXRX. This is, by the way, a company that NVIDIA is investing in, so maybe this one has more legit grounds besides the gamma squeeze. But we see also a cup and handle pattern in the chart, on the daily chart this time around. We see them buying a lot of out-of-the-money calls. We see a lot of unusual changes in out-of-the-money call open interest, as in they're probably preparing and building for a squeeze higher. Out of all of these stickers, to be honest with you, if I had to pick, speculate on a squeeze, I'm probably going to go with RXRX. But unfortunately, when you see these kind of gamma squeezes, all of a sudden comes some of these amateur traders and they say, oh, but, Open Door has a fundamental case. It's real estate is going to come back because we have prices going down, so listings will increase. And yeah, they try to justify a squeeze phenomenon, arguing for a fundamental case that doesn't really exist. I would say if you're really betting on that theme, that we're going to see home prices going down and more listings, why not go with a legit play like Zillow? Ticker Z in the weekly chart. It has a pattern of higher lows. If you're an investor, serious investor, you probably want to go with something like Zillow. If you really believe in that theme, not Open Door as much. How about you go with WELL? This is Welltower. Stock been trading at all-time highs, and it's been holding pretty good. This is not just a bet in real estate, but on the demand by senior services, which if you look at the jobs numbers, for example, we see healthcare jobs leading job creation in the economy outside of government. Why? Because we have an exploding senior population, and we need to offer housing for them. And hence comes Welltower, unless, of course, we're going to execute the seniors, which seems to be what we're aiming for here by cutting Medicaid. So that's the bearish case for Welltower. Another one you could play is Avalon Bay, AVB weekly chart. I mean, if you're serious, if you really believe that somehow we're going to see more activities in real estate, this is more of a bet on the affluent consumer, luxury apartments and condos. But I would say be careful with it because you also got a mayor elections in New York City where the company has a lot of exposure, and that could impact the company negatively if there's any freeze in rent. Better yet, if you're a serious investor, we just issued Maverick Long Portfolio Review for the members. If you are a serious investor, you got to pick something serious. And believe it or not, Maverick the Bear is beating every bull out there year to date. Well, how did that happen? Because we're betting on themes. Among them, for example, the devaluation of the dollar. That's a bearish theme. You can go long certain stocks to play that theme. We're playing a theme of the consumer downgrading spending from certain stores, outlets, brands to others. You can play that bearish theme by being long these stocks where the consumer is going to downgrade their spending to, where they can see more volume. So following these themes, it's not even close. The Maverick portfolio is beating the market by a mile this year so far. And it's not all boring names, by the way. We got, for example, QuantumScape in the long portfolio, and that one exploded significantly higher as of late. And in that video, I also gave you a strategy to hedge your QuantumScape shares. We have a report coming out really soon. What if the stock crashes because of that? Well, you get to lock your gains. So consider joining us as a Maverick member, folks, and check out that video that I produced today. And I also produced an Options 101 video, how to lock your gains. What is the guidelines, some tactics in locking gains? Let's say that you bought some call options in Open Door. You got lucky. Stock exploded higher. Any strategies you can utilize to lock in your gains that if there is a flush, if there is a reversal, if there is a switch from call to puts by the insiders in this trade, how can you lock in your gains? I give you all these kind of strategies. Better yet, if you're a serious investor, why not go with gold? I mean, we're getting these reports that we have a lot of countries, a lot of central banks, including China, that are now secretly stockpiling gold. Nobody believes in the US dollar anymore. This is the number one profitable theme that I got in my portfolio this year, betting against the dollar. And the US dollar right now is becoming toilet paper. You might wipe your ass with it. Why? Because we're adding $5 trillion to the deficit. We continue to spend like a drunken sailor. And on top of that, we want to reduce rates and tariff everybody, which is causing them to dump our assets and hence reducing their holdings in the US dollar. And I don't think that's a theme that's going to reverse anytime soon. So if you happen to be a serious investor, think about these kind of themes, folks. Don't chase the squeezes. You can play them, you can roll the dice, but you got to be a serious investor at the end of the day. That leads us. If we have a meme stock mania like Open Door, biggest gamma squeeze in the history of the stock market, why are we calling Jerome Powell out here and saying he should reduce rates? Now, you know I'm not a fan of Powell. He's a weasel. And I criticized him last year when he cut rates by 50 basis points, and I said it's going to come out and bite him right in the ass. because he's going to be accused of being political. He cuts 50, inflation begins to come back. The new president probably going to do some tariffs, which will be inflationary. And Powell's not going to be able to reduce rates anymore. He's going to be accused of being political. And that's exactly what happened. With that being said, you have Secretary Besson, who loves to play dumb on TV and just be the yes man for the president. A kiss ass, pretty much, because he wants to keep his job. Why does he want to keep his job? Because it's been lucrative. He's been making a ton of cash doing insider trading. So now all he does is just kiss ass, even though the guy's not dumb. He knows that all of these policies are misguided. And now we're getting a report that it was Besson who told Trump not to fire Powell. And of course, Besson, at the end of the day, not stupid. When Trump came out and said he's going to fire Powell, what happened to the longer end of the yield curve? Interest rates actually exploded higher. And that was the evidence that Besson needed to say, Mr. President, don't do it. So underneath it all this stuff talk, because Besson came out today saying we should investigate the Federal Reserve and see if the Federal Reserve is worth keeping as an institution or not. What the hell are you talking about? You want to call out the Fed? Call them out on the insider trading they've been doing for years. And then they don't get punished. They retire from the Federal Reserve and they go work in PEMCO and universities and make millions and millions of dollars. Of course, you're not going to call them out on insider trading because you're doing it. And now we have Representative Anna Lunatic, and she says that she wants to investigate Jerome Powell, criminal investigation by the DOJ. And they're going after Powell because he's spending $2.5 billion on renovating the Fed's building, which kind of shady. What are they hiding in that Fed building that requires $2.5 billion to renovate? But as I said before, I'm not going to take any of these hypocrites' words when they passed increasing the debt by $5 trillion. Now you're going to lecture us about, wasteful $2.5 billion and renovating the Fed? Try another one. And isn't this bitch Mexican, by the way? Take it easy, honey. If it was up to the MAGA people, they'd deport your ass to El Salvador. So take it easy. Then you got this cocksucker Pulte, and he's also criticizing Powell. Oh, he's 72, he's wealthy, he doesn't need a mortgage. Yeah, we know that. This is what we've been talking about Powell for years now. All of you were saying, Powell is a genius. Captain Powell, he's going to do the soft landing and such. Now you're turning against Powell because he's not cutting rates and manipulating asset pricing to your favor. Pulte, by the way, ever heard of Pulte Homes? Major home builder in the country. This is as blatant corruption as you can get because, of course, he wants lower interest rates. It's going to benefit his family. And I say to all of these people right here, what do you got to say when we have a meme stock mania right now? Biggest gamma squeeze in the history of the stock market on a profitless company. What is your case here to push the Federal Reserve to lower rates? When you're all coming out on TV saying the economy's great, the economy's better than ever before, it's the golden age. Why do you need lower interest rates then? If anything, the policy maybe is a little too loose, and J. Powell should be hiking rates instead. Ladies and gentlemen, the amount of stupidity is absolutely absurd. Today I was watching CNBC, and I spotted the dumbest question I've ever heard on CNBC. It's a disgusting channel. It's propaganda for the hedge fund managers and such. But this is a new law. Take a look.
Can I take the other side of that, though? I'm not advocating for or against tariffs, okay? But I will say that all of our viewers and listeners know that in the past 4 or 5 years, prices have gone up for everything.
Yes.
Shockingly so. I mean, shockingly so for a lot of things. Food, household goods, just some of them seem like they've doubled. Mm-hmm. And yet corporate balance sheets seem good. Corporate consumer spending seems pretty good. Is there a case, Rebecca, where we get another couple percent from tariffs? Mm-hmm. Some people are going to call for doom. But like during COVID and all the price increases we saw since then, somehow we're still okay.
Okay, where do we begin here? I mean, this guy, by the way, this is the business channel. This is the trusted business channel. And this guy doesn't know the difference between the pandemic and now. It's like an airhead asking a question. Isn't this like the pandemic? No, it's not, honey. Back in the pandemic, they printed trillions of dollars. Stimmies all over the place, which, by the way, caused inflation. So if you're going to argue that, maybe now the consumers and the economy is going to withstand tariffs, just like they did inflation, the number one question that comes to mind is, ever heard of the stimmies? Back then we had stimmies. That's why the economy held throughout inflation. But now we see the damage. Savings are down, delinquencies are higher. The consumer is no longer at the same position they were back in the pandemic. Any inflation right now will be devastating for the economy. And oh, by the way, the Fed is losing billions and billions of dollars right now. They can't afford to print any more money. Our government is now drowning in debt. We're paying over $1 trillion in interest payments alone. Big difference, Mr. CNBC, from the pandemic and right now. And for the donkeys who keep saying, oh, tariffs are not inflationary, you just wait a little bit. You're going to begin to see that tariff inflation beginning to work its way throughout the economy, and you'd be crying the blues because it's going to hurt you as much as everybody else. We are already seeing the inflation impact from tariffs happening right now in certain items. Look at the price changes at Walmart from May to July. We see certain items increasing by over 50% in price, and more to come. Amazon, the average price of flow items from the beginning of the year to this month in July, up 5.2%. You're already beginning to see the impact of the tariff, which is inflation. And China doesn't pay the tariff, Vietnam doesn't pay the tariff, we pay the tariff. Either the business owner or they're going to pass it down to us, the consumer. And we haven't even scratched the surface yet. Because if you're going to look at, oh, tariffs are not inflationary because car prices didn't go up, of course, because that's the inventory that we got right now. New inventory will be subject to tariff. It takes a bit of time before that hits the market. And oh, by the way, for folks who say he's going to tackle and it's just a negotiation tactic, we're going to do some trade deals, yada, yada. At the end of the day, you've added $5 trillion to the deficit. You got to plug that somehow. And a 10% tariff is not going to do it. You got to jack up those numbers higher, which means that the tariffs are here to stay. And we have to go 30, 50% to even begin to talk about plugging the deficit and kicking the can down the road from deadline to deadline to deadline. At the end of the day, you got to face the inevitable. You got to face the music, which is either going to chicken out completely and say no more tariffs. In this case, we have to deal with a massive deficit. Or you got to have the tariff playing out. And I think we have a lot of complacency right now by the market, by the consumer, by everybody really, dismissing the idea that tariffs are inflationary. Just like they dismissed inflation as transitory back in 21. Big mistake, and you're about to see the wreckage. And this time around, unlike the pandemic, there is no buffer. We can't print anymore, and we can't reduce rates anymore. We can't do anything. You're just going to have to feel the pain. And with that lovely message, let's add more color to this conversation by revisiting the market activities today, beginning with the closing of the indices. And here we go. The diamonds closing negative. Big flush at the end of the day, down 19.12 points or a loss of 0.04%. The Nasdaq managed to close positive though. Thank you pretty much to Nvidia not flushing down, 78.52 points to the upside or a gain of 0.38%. And the Spider slightly positive, 8.81 points to the upside or a gain of 0.14%. But your leading indicator, Russell 2000, not so hot so. Leading the pack to the downside, losing 0.90 points or a loss of 0.4%. Looking at the sectors, comm services leading the way. That's, of course, a result of Verizon's earnings, number one, and then we see gains on Google and Meta. Of course, you got Alphabet, Google reporting earnings this week, so the gains that you see in comm services right now could end up being losses at the end of the week. The best theme is the resources theme, the Maverick theme, which is in metals, aka materials. If it goes down, you buy the dip. Materials been consistently leading the market higher this year. The leaders to the downside, though, you got energy down, industrials, and healthcare. Healthcare has a double whammy from the pharmaceutical tariffs, which right now is not being taken seriously yet. The assumption is there is a taco in there, but there is no taco in the cuts of Medicaid. That's already done. And cutting Medicaid is going to impact the sector negatively, especially the health insurance companies, the services companies. Those you got to avoid. Looking at the breadth, the trick here is for the market maker, if you got 50-50 or close to that kind of breadth, the market maker wins. Why? Because the majority of the calls and the puts bought in the previous session end up losing money. We're talking about calls and puts bought in the previous session and held all the way to today's session. Most of them lost money. How do we know that? Because the market maker managed to close closer to 50-50. At the NYC, we have 41% advancing, 57% declining. In the Nasdaq, we've got 50% advancing, 48% declining. What also matters is at the end of the week. So if you see a day, for example, midweek where we see really good breadth, and then you see a day with really bad breadth. At the end of the week, collectively, the market maker needs to close the week, all in all, at around 50-50. So sometimes when you have, for example, a week where Monday, Tuesday, Wednesday, we see really good breadth. The likelihood is at the end of the week, the market maker is probably going to flush it down to balance that exposure and get it closer to 50-50, where they can make the majority of the calls and the puts for the week expire worthless, and they capture all of these gains. And the market maker have been winning a lot this year. Let's move on to the heat map. We're not going to read too much into it because we have earnings impact. So you see certain names down, certain names up. A lot of this is based on reactions from earnings, such as Verizon today was up about 4%. But do we have any themes here that we can spot? Sure. You got utilities. Collectively, they're positive. At some point, investors going to say, okay, maybe I made a lot of profits from the rebound in tech. How do I begin to hedge a little bit here as the seasonality changes? You can rotate some of your gains to utilities. The materials remain hot, especially if you think the dollar is going to go down. This theme is going to continue to be hot. Other names that capture my attention are names like Hershey's, HSY, really undervalued. And at the same time, you have cocoa prices going down, the commodity, so that should be positive for Hershey's. Besides that, like I said, we're not going to read too much into the map because A, we have earnings, and B, it's Monday, so we have a lot of balancing from options expiration last week, and that could tilt the picture one way or the other. Moving on to commodities. We see a retreat here in crude oil, WTI and Brent pretty much flattish for the day. We see a little bit of decline in the gasoline RBOB, under 1%. But then we see heating oil, diesel up about 2.25%. So that's inflationary if you have the prices of transportation, especially for goods, moving higher. Nat gas, not a good theme right now. Seasonality is not good for nat gas, so down about 7%. Seasonality becomes positive for nat gas as we head to the back end of the year. Looking at softs, cocoa rebounding about 3%, but like I said, all in all, it's down, and that's good for Hershey's. OJ continues to be squeezed higher. That's another squeeze, and it happened because of the Brazil tariffs. Yeah, tariff Brazilian goods 50%. Guess where the majority of OJ comes from? Same thing with coffee, by the way, but coffee is showing more weakness. And that's because the crop is better than expected. And we'll see how long that weakness is going to continue in coffee futures because the majority of coffee, again, comes from Brazil. Sugar down about 3%. It caught a little bit of steam based on the talk about, Coke is going to now use cane sugar, but the gains were not sustainable. When it comes to metals, those gains are sustainable, specifically if you see the dollar going down. So we see gold, silver, platinum, copper, palladium, all doing pretty good. Meats, there's no stop in sight. Live cattle, feeder cattle. We got a lot of shortage, and with the tariffs, those prices will continue to go higher and higher and higher. Grains, not much of a movement today, but in the currency market, we see the Japanese yen up about 1% based on the elections results, and that's adding pressure against the US dollar, which translated to being good for metals, gold, silver, platinum, copper, palladium. Moving on to the big casino, the options market, what do we see here? Unbelievable. The options volume for Open Door is more than twice the volume for NVIDIA. Never seen before. Never. But it also catches my eye that not only we have an increase in the volume, but we have an IV percentile at 99%. No wonder why we got the end of the day flush. Because we have elevated implied volatility, which means that the prices of the calls are way too high. And that's going to be restrictive for speculation. But the prices of puts are getting cheaper, and that's why they switched to the puts and they dropped it down. So you got to be careful here, really careful with Open Door. I'm not saying it's over yet, but I'm saying we're getting close. If you see the IV rank hitting 100, that's pretty much it. What else stands out? Of course, we have Lucid, the IV percentile at 98%, so no wonder why we see a pullback of about 7% plus. QuantumScape, you look at the IV percentile, 98%, so we see it pulling back over 14%. In other words, folks, if you have a certain move up or down, and you see the IV percentile reaching 90 plus, you're getting close to the end of the move. And the IV percentile is more accurate when it comes to the calls, squeeze higher. The IV rank is more accurate when we see a flush down. So if you see a stock going down big, and the IV rank getting closer to 90, 100, you're getting close to a bottom. On the other hand, if you see a stock lasting higher, and the IV percentile reaching closer to 90, 100, you're getting close to the top. Let's do the unusual activities, beginning with the bullish ones. FXI, China. Somebody sees a break to the upside, and I agree. One of the themes I'm betting on this year is China. It's been hot. Somebody sees more gains to come in the FXI. They bought the 40 calls, and they sold the 45 calls, also known as a bull call spread. The expiration date is September 19th. Right now, FXI is trading about 38, so not so far out of the money. They spent about $4 million on those. What do we see right now in the chart of the FXI weekly chart, that is? Look at the 50 weeks moving average. It is done going down. It's now moving higher, so we have a shift in the wave from bearish to bullish. Likewise, we have a pattern of higher lows and maybe higher highs. Perhaps that's what the trader is betting on. Next, we have CRM. In this case, they bought the 265 calls. The expiration date is August 15th. Right now, CRM is trading at about 263. They spent a lot of money on this one, about $8.5 million. So it looks to me that somebody maybe knows about an earnings announcement coming from Salesforce, and they're betting on it ahead of time. Really unusual for CRM. How about CVX, Chevron? They beat ExxonMobil in a contract in South America. So now folks are betting for more upside to come in CVX. They bought the 160 calls for the expiration date September 19th. Right now we're trading at about 150, spending about $1.75 million. Here's another bullish one for you for ETH To ATH, Ethereum. We'll be talking about this as probably a catch-up play for Bitcoin. In this case, we're trading right now at about 28. The trader here bought the 40 calls for the expiration date of December 19th. So they see massive, massive gains to come in ETH. And they've spent about $1.25 million on those. We talked about Ethereum before, cup and handle pattern in the weekly. We got a resistance pattern that now broken above. Maybe we're going to take a little bit of a pullback. But in time, if we keep that resistance line as support in yellow, the likelihood is Ethereum is probably going to trade at 4,000, if not above. And especially, of course, if the dollar continues to go down. What about the bearish unusual trades? How about NVIDIA? A little excessive. Maybe somebody's hedging here before the earnings date in August. They bought the 170 puts. The expiration date is August 29th. Spending about a little over $7 million. I think it's a hedge. Somebody bought it, made a lot of profits, and now they want to hedge just in case we see a negative reaction by NVIDIA when the earnings report comes out. How about BRKB? They're shorting the old man Buffett. In this case, they bought the 475 puts, the expiration date August 8, 2025, spending about $2.75 million. Berkshire Hathaway, since the announcement of the retirement of Warren Buffett, hasn't been doing pretty good. I still think it's a solid company, but right now, if Buffett is dumping and exiting, he probably sees a lot of problems with the market and the valuations that we see. I think that once you see the economy getting closer to a recession and the market crashing, I think Berkshire Hathaway has an enormous amount of cash and bonds that they're going to utilize to buy the dips in sectors that they see will lead the next bubble. And Berkshire Hathaway is going to be definitely a buy. So I cannot wait, to be honest with you. I cannot wait to see a crash in the market here because it's going to be a historic opportunity for Berkshire Hathaway. Let's do some charts. We begin with the daily chart for the E-mini future S&P 500. What can we see here? The low volume grind higher continues in this really tight channel. There are signs of weakness. You can see the MACD turning negative. You can see the RSI with negative divergence. But we're not seeing that flush showing up. Why is that? Because you need one of the big caps to break down. You need either NVIDIA, Apple, or Microsoft to break down. None of these names reported earnings yet, and I don't expect the S&P 500 to give us a big flush before one of these names report earnings and we see a big miss, or perhaps the bar was way too high and we see a flush. Then we could see the E-mini also going down. So for now, as a trader, you don't have a lot of options in trading the indexes. You have to focus on the individual names. If you happen to be an investor, I think it's a really good point right now to begin hedging your portfolio, as we talked last week about the seasonality. The seasonality tops in July for the technology stocks, and it becomes more favorable for the VIX from July all the way to September, October. So you get a hedge right now while the VIX is still cheap. Do we see anything here in the SPY and hourly chart? We don't see a lot. We see an intraday reversal, but it's not a daily reversal. We haven't lost the gains from Friday's session, so it's not considered a reversal. We still have sort of a higher high pattern showing up. You have a higher low pattern, a little bit of a lower low here, but it was a rescue. There was an exception here with the J. Powell announcement. So that's negated right away. And now we're still maintaining a higher high, higher low pattern. Once that's breaking and we lose, let's say, important numbers like 622, 620, then we can talk about, okay, we have signs of a reversal here, and perhaps one of the big names, Apple, NVIDIA, Microsoft, is reacting negatively. Another important indicator you got to keep an eye on is the IWM small caps. So long as it's trading above the 200 days moving average, the market is good to go. If we lose the 200 days moving average right here, then we got a problem. Of course, we have Mama Bear right here with the bearish engulfing candle. And we never really closed above the top of this candle right here. The high was 224.23. So once we close above, we're out of the woods. Otherwise, we're stuck. And of course, we have bearish confirmation if we lose the 200 days moving average. Here's the dollar index weekly chart. Are we done? Are we going to go down again now? I would still give it the benefit of the doubt that we might have seen a negative reaction today based on the Japanese yen, the elections in Japan. But right now, you look at this MACD right here, you got to give it the benefit of the doubt because it is really oversold. To begin, at least to find some footing. I think in the long run, the dollar is dead. But right now, we could see a rebound in the dollar resuming. So you cannot assume that the dollar is ready to flush down and you begin to go heavy in the metals and the inverse dollar trades, if you may. I think you still have to be open to the possibility that we could see the dollar rebounding more and we see these names pulling back again. Among them is the old man gold. Right now we're looking at gold futures. It's above the 50 days moving average. It looks to me that it's ready to break out. Of course, it will break out only if the dollar is heading down. Today the dollar was down, but as we just looked at the weekly chart of the Dixie, we could see a possibility of resuming the rebound in the dollar. If that is the case, I think you're going to see gold consolidating. Now, we're not going to hedge our gold positioning right now unless we lose 3,250. So right now, gold is a hold. You break above 3,500, then it becomes add, buy if you're not in it. But you got to confirm with the dollar first. I think we're not going to get to 3,500 without the dollar breaking down. Another inverse dollar play is copper futures. We have a bull flag breaking out, but is it possible that we could see a stop here at maybe a lower high and head down? Yes, that's a possibility, especially if the dollar rebound is not over. If today was just an exception because of the reaction to the Japanese yen, we continue to see a resumption in the rebound of the dollar, or any bad news, especially from China, bad economic news, that is, recession. If that is the case, then yeah, copper could stop here, begin to trend down. Otherwise, in the long run, copper is still bullish, and if we expect the dollar to go down, then the pullbacks are opportunities to buy. What's going on in crude oil? Line in the sand is your 200 days moving average. Make sure it is on the adjusted chart. If we lose it, we got a problem. So long as we're trading above, that's okay. And we know that the seasonality is pretty good for crude oil from this point on all the way to September, October, and then it becomes bad. It's not so good for energy stocks, by the way. The seasonality is good for the commodity. So right now, give it the benefit of the doubt that we could go all the way to 70 and above, but if we lose the 200 days moving average, we got a problem. How about the big names? Apple 2 hours chart. It is trading above 210. We got Mama Bear right here at 207.5, meaning if we close on daily basis below 207.5, you may short Apple. But right now, you got to give it the benefit of the doubt. I mean, they're talking about the foldable phone. Oh, they're doing the fold now. Well, Samsung did that years ago. So what are we jerking off to here? But anyhow, you got to look at the weekly chart. And as I said repeatedly, you have positive momentum going on in Apple right now, and it could aim for the 50 weeks moving average. That's about 222. So right now, this is the base case, unless what? Unless we close below 207.5 on daily basis, then it becomes bearish. NVIDIA, can you chart this at all? No, you can't, because you can argue that, hey, we had a bear flag here or a bull flag, and some of these patterns don't play out. Why? Because this is a mechanical phenomenon. This is basically the traders rolling via the 5 delta increment from 145 calls to 155 to 160 to 165, then 170, 175, and they keep rolling based on $5 increment on out of the money calls and squeezing the market maker to buy shares in NVIDIA. This can continue for a long time. It is only disrupted if you have an algorithmic selling event or if there is a whale that dumps a large amount of shares and causes a flush and we see demand for puts resuming. I don't expect that to happen, to be honest with you, before the report comes out in late August. Maybe you'll see some de-risking. Maybe you'll see some insiders reducing their exposure in NVIDIA. Maybe you'll see a pullback to 160s, maybe the 150s. But I don't think we're going to see a big reversal here before we get that report in late August, which means if NVIDIA stays strong, you're not going to see sharp pullbacks in the indices. You need NVIDIA to go down for the index to go down. You got to remember, right now we have a new mantra. We used to say as Apple goes, so will the market. Now we say as NVIDIA goes, so will the market. The souffle Tesla, we have a report coming out really soon, and I think we formed sort of a bear flag here, rejection of 333. We're not losing 313, which is initiation of a short, but you have a report coming out right here. Advice to the shareholders, you gotta hedge. You gotta hedge before this report comes out. If you want to short it, you may speculate at this point, but it's not going to be a short until we lose 313 again. Better yet, if you want to short Tesla, your confirmation is losing and closing below the 200 days moving average that you see right here. We're not there yet. And you got to also confirm with the weekly chart. What's important in the weekly is always the 50 weeks moving average. You see a close below the 200 days and the 50 weeks moving averages. Double confirmation. Got to go short. Last but not least, tulips, BTC. What do we do here? Stuck in a range. If we break 116, close below 116,000, you probably got to trade all the way to the 50 days moving average, about 110. But you got to give it the benefit of the doubt that it is consolidating right here, about to release an energy and break above 120. If it breaks above 120,000, we're probably going to go with IBIT calls again. If we break below 116,000, we're probably going to go with IBIT puts. That's the play right now. Let's move on to the conclusion of this video. What do we have on the economic calendar tomorrow? Tuesday, the 22nd, we have a bunch of Fed zombies talking, from Governor Bowman to Chair Powell at the banking conference. We don't really care. How about the earnings calendar? A little bit more interesting. We have big names coming out before the bell, such as Coca-Cola, Philip Morris, Raytheon. All of these are important names. Lockheed, Northrop, General Motors. All of these are going to come before the bell. After the bell, we have also important names like Texas. You got Intuitive Surgical, ISRG, you have Capital One, you got Chubb for insurance. So we got plenty of important names coming, and we're just beginning here. We're just warming up, folks, as the earnings season begins to heat up. So stick around with us, folks. But this is all I got for you for tonight. If you enjoyed the show, please return the favor by pressing the like button, subscribing to the channel, leaving us a nice comment in the section below. Better yet, become a Maverick member. Don't miss out on the daily coverage. You can join us either on Patreon or YouTube, links in the description. But with that, folks, this is all I got for you for tonight. Thank you for listening. Thank you for watching. I appreciate and love all of you. I'll be talking to you again tomorrow. Good night.
She's wild. And you got to take it easy. You got children. I'm not saying you got to go back there this minute, but you got to go back. I mean, it's the only way.
Someday she'll be here, that's a fact. Someday she'll be coming right back. Maybe I'm dreaming, I hope it's not so, 'cause someday she's coming back, I know. You know I'm ready to see her again, when that someday will never end. When she left with no goodbye, I was stuck with those lonely nights. You know what I mean? It's always the same. Ain't no medicine for that kind of pain. Someday comes, it goes away, bring me a better day. Ain't no pity, ain't no shame. that someday you'll come again. Maybe I'm dreaming, I hope it's not so. Someday's coming, it's coming, I know. Maybe I'm dreaming, I hope it's not so.